So today, let's cover off how you go about finding the right options trade to take. It's the most important part, yet I feel like it's given the least amount of airtime. We're all focused on what strategy will we put around it, but finding the trade is of utmost importance. So today I want to cover one of my most favorite trade setups. I'll go over a few that we found inside of my mentorship this week and give you all of the tools that you need to go and find good trades in today's market. So first up, this is not financial advice. It's simply what I'm doing and have done based on my individual goals and risk profile. Don't blindly copy strangers on the internet. Do your own research, make your own decisions, and get very good at managing your own money. So first up, what we're not going to do when we're choosing a trade. We're not going to choose a stock because it looks cheap. Are we stuck in PayPal? We're not going to choose a stock because surely it won't get down that far. Like maybe Robinhood? Or because old mate on YouTube said it's good. Hands up his bag holding something because YouTube said it was good. And don't get me wrong, I am guilty of these things as well. It's why now more than ever, I'm very focused on not doing these things and instead having a strategy and a plan. One of my most favorite ways to enter is just simply following the trend. That's the easiest setup. There's a few others that I use in different scenarios, but right now the trend is your friend. So I want to take you into the chart. I want to show you a few setups that we found in my mentorship and how we actually spotted them so that you can do the same yourself. Okay, so here we are inside the chart of TSM. When we are following the trend, this is what's important. Number one, that we actually have an uptrend, which is identified by a series of higher highs and higher lows. So if we come back to, even if we come back to sort of August, September, a low, a high, a low, a high that was kind of equal, little teeny bit higher, equals okay. Higher low, higher high, higher low, higher high, higher low, higher high. That's step number one. If your chart does not have higher highs, higher lows, then we're not going to trade that chart for this particular setup. The next part is your moving averages. So I have on my chart here the Bollinger Bands, the 50 and the 150 SMA. They all need to be in order. What do I mean? The 150 at the bottom, then the 50, and then the 20. If they are not in that order, again, this is not the chart for this particular strategy. So that's number one. We've identified that we've got a bullish chart. How do we find the entry point? So we identified our entry just over here. It ended up being this day here, which was Friday. Now, why was this an entry? Well, you can see that we had this downward move. And on a bullish chart, when we have a downward move, typically we bounce back up. As long as that downward move, we saw some rejection from the lower levels, which that's what these 2 weeks here tell us. Lower levels rejected. We were brought straight back up. The fact that we had this great green candle here. Now, if this green candle closed above the 20 moving average, then that would have been more of an entry signal on this day, on the Thursday. So the Thursday was kind of a, let's just watch and see what happens. Because your moving average can act as either a support or a resistance. So we can see through here, we were acting as support, right? We bounced off of it, but we ended up kind of treating it as a bit of a resistance. We hit it and we bounced back off. As soon as we gap up though, that's go time. Gap up is entry. And as far as what do you do now, the what trade you place becomes kind of the secondary part. So what could you have done? You could have bought leaps. I personally did not and won't buy leaps in a market that's kind of unsteady and unstable. I want the entire market to have really good momentum behind it rather than just a few stocks for me to be buying leaps. Could you have bought the shares? Absolutely. You definitely could have bought shares. Could you have placed a sold put? You sure could. Or what we were doing in our community, in our mentorship this week, was all about put credit spreads. So we went for a put credit spread. Now, something that people don't talk about is when do you get out of these things? So, number one, to get out of it on the way up, quite simply, if you hit 50% profit, get out. Get out, get out, get out. Take your money, put it into another trade. As far as how much loss to take, for me, that depends on the chart, because we can have our safe levels kind of all the way down here, right? But as soon as we start breaking our 50 moving average, as soon as we start getting our moving averages crossing as well, so they're no longer intact, then they're get out signals. They're take your loss, get out, don't sort of wait it out. So this is chart number one. The next one that we looked at just yesterday, so we entered Micron just yesterday, for much the same reason, right? We had this drawdown. We started to get a bit of accumulation through this area here. And then yesterday, we had our upward momentum. We're continuing the ride up. Now that coincided with a few different things to take a look at, right? So obviously, taking a look at this chart, we can see Micron is a bullish chart. There's no doubt about that. This candle here yesterday coincided with a couple of different things. We had some volume come back in. So our volume was larger than the previous trading days. So when we've got higher volume on the upward move, that's a positive sign. We also had a cross or a turn of the stochastic RSI, again, a positive sign. How can you enter this trade? Exactly like we just said, you've got all of your options. We went with the put credit spread, chose our strike at safe levels. I mean, nothing is safe, right? We use that term relative, but 315 is the strike that we chose here for Micron, because it gives us we lose this level of support, which we've already proven is supportive right now. We would lose this level around that sort of 345 mark, which is likely to be supportive. We would lose the bottom of the Bollinger Band, we would lose the 50. So if Micron gets down to this sort of 315 level, it's not been a great month for not just Micron, but for the broader market. So that's why I was happy with that trade. And then the other one that we looked at yesterday was SanDisk, for the exact same reasons as Micron. We had this, and you could almost call these kind of mini bull flags. Now, where's my channel? Over here. Let me just draw it in. So if you were to draw that in, potentially we have got ourselves there a little mini bull flag that we've now broken out of. So what would that mean? That would mean that if this pattern plays out, our potential takes us all the way up to, I mean, by the time we measured this, call it 900-ish. So plenty of upward room to get out of a put credit spread safely. This one we got all the way down at, I believe it was 410. 410 is our sold put. So plenty of room for wrong. Let's just measure that. So we entered yesterday. down to 410. So it was about 30% room to the downside. And obviously, now that the stock has risen up, so as of aftermarket today, 410, where are we? Call it 36%. Now, these trades right now are more likely to play out positively than trying to find the bottom of something. There are times where I do trade the let's find the bottom, but at the moment, momentum is our friend and the trend is our friend. So we don't want to be playing bullish trades on bearish charts. That's the biggest bit of advice that I can give you right now. So if we look at, Walmart's another great example of bullish chart. Now, the only reason why I didn't look at anything on Walmart yesterday, or was I've been eyeing Walmart off, is simply because of earnings. And whenever possible, I don't trade over earnings. So go ahead and find some charts that are bullish at the moment. It might not be what you're used to trading, and that's okay. I think that as traders, the best thing we can do is adapt our strategy to the right chart rather than trying to fit a chart into our strategy that just doesn't work. GLW is another one that I'm kicking myself. I got in here and I just did a quick flip covered call. I feel like I want to say maybe it sold for, I can't even remember, 104 or something. And obviously that continued its upward move. So this is now another stock that I'm just waiting for the pullback for the next confirmation, because these are the charts that we want to trade right now. All right, so that's it for these particular charts. Follow the trend. Don't try to catch the bottom on these markets. There will be a time where you know the bottom's in, but trading this way, I feel, just keeps you that little bit safer. When things are going against us and everything's on the way down, if we're trading stocks that have the momentum behind them, it just helps us. Now, on a side note as well, my mentorship group that I have at the moment, it's very much for beginners. So that one's aimed at if you have never traded before, you don't know what an option is, you really just want to get started. That's the group that I'm bringing through at the moment. But my next group that I'm bringing through will be all about, you know what an option is, you know how to buy and sell, you've got your charts, you've got everything up and running, you've got your account to trade in, but you just want to understand this a bit better. Maybe you want some strategies behind you for different markets, how to trade different charts, and how to just continually earn little bits of income along the way. So if that is you, I will leave a link below for a wait list for that particular mentorship that will be opening in the next couple of weeks. So if you're interested, drop your name on the wait list and I will let you know as soon as we've opened up.